Today we're talking about young people that are putting money into investments and shares and stocks on the stock market. On the phone with me today, I've got the CEO of Purple Group and what we're talking about today, Easy Equities. His name is Charles Savage. Charles.
Albert, thanks for having us on.
Perfect, man. Good to talk to you. It's quite an honor to have you here on Quintessential Finance because Easy Equities is being spoken about quite a little bit. Just to give our listeners an idea, you guys just recently won a certificate of achievement at the Abu Dhabi Innovation Jam 2017. You've been winning awards for this investment platform for a couple of years now. You guys seem to be kicking ass and taking names. Just to give the listeners a bit of a picture of what you guys do, what would you say in terms of what is that 10-second sell? You know, like an elevator sell where we get in the elevator and you have to sell me on Easy Equities in 10 seconds. What do you usually tell people? What is Easy Equities to you?
Cool, man. I mean, I've been in stockbroking for 17 years, and I think I came to the realization a couple of years ago that what we were selling was cockpits to fly Boeings, and our customers weren't licensed to fly Cessnas. And really what we've done in Easy Equities is create an interface that allows ordinary people, everyday South Africans, to go and buy shares easily without any barriers to entry. No minimum trade costs, no minimum investment values. The interface is more akin to Uber and Facebook and Amazon than it is to the cockpit of the Boeing. So really just easy interface and access to go and buy the shares that you love.
Yeah, I like the whole Uberization thing, and I've heard you say Easy Equities is a bit of an Uberization at the end of the day. So, I mean, in terms of an Uberization of a company, that means it makes it as simple as possible in terms of accessing their service. And you've said this before, you've said anyone can invest. Do you believe that? Do you stand behind that statement that anyone in South Africa can invest their money on a platform like Easy Equities?
Yeah, so let me give you some numbers. I mean, the youngest real customers are 12 years old, and they're creating portfolios for themselves. And our oldest customers are 92. And both of those groups felt that before they were either too poor or not educated enough or didn't have enough money to go and invest in the stock market. And everyone in between is taking it up as well. So we truly believe that we are democratizing access and making it easy. Is it as easy as it can be? Never. I mean, we're learning every day from our customer experiences and from what feedback they give us, that there are areas that are still difficult or cumbersome to understand. And we're constantly trying to make it easier and easier for people to do it. But quite frankly, it's a university radio station. Anyone who's got to the point in their lives where they're at university, every single university student, this is what they should be doing. Right. With any spare money, 1 rand, 5 rand, 10 rand, 500 rand, whatever it is, they should be starting that journey and buying some shares.
Yeah, the way I used to think about it, especially when I was at the university level, was that it was too expensive to get into stock brokering. And, people are always like, oh, no, you're going to spend a whole lot of money. So in terms of Easy Equities, I've read up on you guys quite substantially now, and you guys do a fractional share right. And this is one of the ways you guys make it easier to own shares. So what exactly is a fractional share right?
Cool. I mean, you hit on 2 points that I'd like to address. The first is it was too expensive to buy shares before. You had all of these minimum charges that people had to pay before they could buy their first share. So the first thing to say is none of those exist anymore, and the platform is free, and there's no minimum, so you don't pay monthly fees and anything like that. The second one, which is what you're talking about now, is fractional shares. What we realize is that the shares that people really want to own are shares that resonate in their daily lives, places that they spend money, places that they bank, where they buy their life insurance, where they shop. And because those are popular brands, they're also the most expensive shares. So I'm going to use the most expensive share as an example, Naspers, which owns MultiChoice and Tencent overseas and a whole lot of other things in the chat. And that's a 2,500 rand stock. Now, there are not that many people in South Africa. In fact, 90% of our population can't afford to buy Naspers. But every single person I've ever asked is, would you like to own a share in Naspers? They say yes. And so we realized that we had to do something about that. And so we didn't invent fractional shares. Overseas in America, fractional shares have been around for 100 years, if you can believe that. I mean, it's just crazy.
Wow.
But in South Africa, it hasn't been around in the stock market. We fractionalized houses through things like timeshare, but we've never thought that the share industry would benefit from it. And so we stumbled upon it, and we created a contract which is now called a fractional share right. And what it means is you can go buy 1 rand of Naspers or 1 rand of any company that you want to own. And if you've got 100 rand to invest, that means that you can buy 10 rand of 10 companies, or you can buy 20 rand of 5 companies, or just 1 rand of 100 companies.
Right.
So really, the excuses have gone. There is no reason why you can't go and buy the shares that you love.
No, totally. But do I own the share or do you own the share? As Easy Equities, do you own it or am I actually a shareholder? Am I a physical shareholder?
Yeah, the minute you own the full share, you are the registered shareholder. Until then, what we do is we own the share and we sell you a part of that share. And we do that for all. So we end up owning one of every JSE listed company. And people who can't afford to buy a full one, we then sell them these fractions. And then what they can do is they can continue to buy fractions and accumulate fractions until they own a full share. The minute they own a full share, it automatically, the change of ownership happens and they become the title registered shareholder in that share.
So when I see one share on your platform, it says, okay, Naspers one share. I've got that share. That's under my name forever.
That's your name. It's in your name. You get the dividends, the voting rights. You get everything.
Wow.
And the only difference between a real share and a fractional share in terms of the ownership is the only thing we don't let you do with your fractional share is vote. Now, that's for now. It's not a case of us not being able to give you the vote. Of course, we could fractionalize the vote. It just doesn't make sense. And users aren't saying to us, please give me a vote on my fraction of a share. It's not going to make a difference. But interestingly, in time, as the platform continues to grow and lots of users, the collective vote of those users is going to be interesting. So, 3-4 years from now, when we've got millions and millions of customers on the platform, then we'll give them the vote because it's going to make a difference. And that's really what we're trying to do, is to give South Africans access to shares and then give them the ability to express their vote with the companies that they own.
Okay, let me be frank with you, Charles. I'm going to reveal my bias. I do work through your platform, and I have, as a man that's working in South Africa, looked into how can I make my money grow. And obviously, the one thing you stumble onto is exchange traded funds, and they tell you to put your exchange traded funds into your tax-free savings account. And EasyEquities, you guys actually give us a tax-free savings account that we can use when we sign up. But my question is, because an exchange traded fund is say a 30-year investment, you want to leave an exchange traded fund as long as possible to get all that money. Is EasyEquities going to be around in 30 years? Where do my shares go if you guys suddenly disappear? Is there a chance of you disappearing? But what can you say to guys who are like, okay, I want to start investing. I want to start putting my 30,000 Rand per year into a tax-free savings account and leave that money to grow for 30 years. How do I know that my money's safe with you guys?
Yeah, so there are various regulators that regulate this market, and the fact that we're a listed company means that we're regulated by the JSE. We're a financial service provider, so we're regulated by the FSB. We also audit it twice a year. So will we be here forever? Sure, I think so. But I mean, lots of companies have said that. Kodak said that. Where are they now? So the strength of the business model is really the regulatory environment that we operate in. So we are as strong as any other stockbroker that you could buy shares from. So if we leave, let's just say that for whatever reason EasyEquities isn't here 100 years from now, your shares are registered in your name and in your title, and they can't go anywhere. They can't disappear. You can't. People's shares just don't evaporate. So the bottom line is that regardless of whether or not we will be here, your shares are safe and will always be there for you.
Yeah.
And the industry is very well protected. South African Stock Exchange is rated in the top 5 in the world for its regulatory framework, and it really is. It's probably the safest place that you can put your money in. I don't say that lightly.
Wow. I mean, if you're not going to say that lightly, then we got to take it with the weight that you say it. I mean, but I do kind of feel there is a protection around South Africa. It does feel like a very secure space to be in. But I think, guys that are going to be putting down 30,000 Rand, say a lump sum, it's a bit, scary for them to put that. I mean, it was scary for me to put money in. But thanks for clearing that up. I'm glad that we know now that we own the shares. But I do want to circle around to guys like me who, you get your first job, you suddenly start getting the money and you go like, whoa, wait a second. I need to make this money grow because my bank is only giving me a percent every month. But in terms of EasyEquities, you guys say you should join and you should put as little bits of money as you have into stocks, and you should invest it into the brands you love. Is that good advice do you rate to tell someone to put the money into a brand they love? Shouldn't they do a little more reading up in terms of where they should be putting their money?
So both answers are right. Let me tell you why we say that. There's a very famous investor, one of the best investors of all time, is a guy called Peter Lynch. And Peter Lynch said, when somebody asked him the question, what shares you should buy, he said to the respondent, look around you. And what he was really saying is that if you can identify good businesses based on where the queues are or what product people are holding in their hands or what clothing they're wearing. So if we think about that in South Africa, how difficult would it have been for people to find Capitec if they just looked at the growth numbers that they were achieving? So the starting point is just buy what you're comfortable, buy what you see around you that is creating success and be part of that. What that leads to, though, and starts, is an investment journey and education that will go on forever, and you will get better and better at it. But too many people have been too scared to start, and so the education never starts. And investment is a long-term journey, and there are going to be ups and downs along the way, like anything in life. And you're going to constantly learn and evolve and get better at it. And the key thing to understand is that the earlier you start, the better those outcomes are going to be. I mean, Warren Buffett, who is the greatest investor of all time,
Right.
He was interviewed, and it's one of my favorite responses. The interviewer said to him, "What's the biggest investment mistake you've ever made?" And you can imagine that the interviewer was trying to trip him up, trying to get Warren to say, "I bought this company that went to zero."
Yeah.
And his response was, "I didn't start young enough." Now, Warren Buffett was 11 years old when he bought his first share.
Good grief.
In a world, I mean, he's in his 80s now, in a world that didn't have cell phones and smartphones and internet access, in a world where an 11-year-old kid had to save his pennies, walk into a stockbroker, and buy shares. And he had excuses. We don't have excuses anymore. And if he's the best investor of all time, is telling us his biggest mistake is that he started too late. Well, what he's saying is that he wishes he had more time. He wishes he had another 10 years or a decade to do it. So the key thing is get started. Get started by buying the shares that you know and love, where you see the cues. And then from there, the minute you're on the platform, you will get research notes and information, and you'll start to be part of the community, and your learning will evolve, and you'll start to take an interest and read books and all that kind of stuff. And in the outcome, what you're really doing is educating yourself towards a safe, wealthy retirement. And everybody wants that.
For sure.
That safe, wealthy retirement starts by going and buying the shares you love.
Yeah. Now, Charles, you're a technologist yourself, and obviously with that title comes the whole burden of having to move forward with the internet. So in terms of moving forward with the internet, in terms of Easy Equities, can we be expecting an app soon? Because I know there's no app as we stand right now. The mobile site does okay, but is there an app coming, and what are the technological advancements for the future of Easy Equities going to present? What opportunities?
So, good question. And the first thing, the big priority right now is we're going to launch US shares on the platform.
Brilliant.
So people can buy Apple, Google, Facebook, and all those kind of shares. The second thing that we're focusing on is that we're moving to a fully responsive app, a fully responsive website, which will work. You said that the website works okay on mobile. It's going to work brilliantly on mobile. And the third, the next leg of that is that will be wrapped into an app. And then we'll deliver that as an app. And so when time frames, US shares will be before the end of July. And in terms of the responsive website, that'll launch about the same time as shares. And then it'll feel like a really good app experience when we do that. And then wrapping that into an app probably 3 or 4 months beyond that. So over the next 6-7 months, you've got lots to look forward to.
Brilliant. I'm looking forward to seeing it grow. But in terms of the internet, I've seen ebooks being written about how to get into investment, even through your platform. I've seen podcasts popping up, and personally, just knowing where to look is a very good thing. So I think something for the listeners is to go out there and find the podcasts, find the ebooks that show you how to invest in South Africa. But how do we get this is my final question for you, Charles. I don't want to keep you too long, but how do we get the poorest of the poor on this platform? How is it possible to get through to somebody and say this is 100% the way to go if you want money once you retire?
Yeah, I mean, distribution to those communities is very difficult. So we've got as a business, we're thinking about how we can get our product to the market, and there are very few businesses, very few opportunities that get us that distribution. So one would be like the post office. There's a post office in every small town, so that would be a good place for us to go partner. But the thing that is accelerating beyond physical walls is smartphone access. So, how long is it going to take for the poorest of the poor to be able to afford a smartphone? And if you look at all of the internet statistics, and especially around the fact that the cost of these smartphones and the performance is halving, the cost is halving and performance is doubling, you could foreseeably, within the next 3 to 5 years, see a smartphone launch at a $10 kind of price. And at that point, you've got a device and an access point to attract the poorest of the poor, because they are walking around today with 150 rand cell phones. And so I think that's going to be a better strategy, is watch that smartphone market. When it gets to the point that it gets to the mass, it can reach everybody, then our product reaches everybody as a result of that.
Perfect. Well, Charles, thanks for sitting down with us today here on the show. I just got to say, we're standing behind you. A place that doesn't have exorbitant brokerage fees, I think, is the way forward for the poorest of the poor and your regular middle class citizen to try and get into equities. Last thing, what is your mantra every day when you wake up, or even your investment mantra? When do you pull out your money, and when do you buy and sell? What is your little mantra? When do you do those things?
I very rarely sell, because the things I buy I love. So I've got to fall out of love with something before I sell it.
Okay.
And so for me, I like businesses that are doing good things, and I say good things, not just things that make profit, but good things for their communities and making a difference in people's lives. So those are the ethics that I live by. And that's what we're trying to do in Easy. And I've been inspired by lots of other good business models, and finally found a way to do it with shares. So I get out of bed to make a difference. I get out of bed to really try and empower and drive the democratization of shares. Because in the outcome, and I don't think I'll be around to see it 30, 40, 50 years from now, if this really works and takes a foot, there are going to be extraordinary stories of ordinary South Africans that change their lives because of the stuff that we did. So that's what gets me out of bed.
Awesome. Brilliant. There you go. Charles Savage, he's the CEO of Purple Group and Easy Equities. Thanks for sitting down with us today.